The Federal Reserve is deeply involved in the financial system. Part of the problem is the fact that there's no transparency. They still haven't admitted that they got caught printing $16 trillion during the financial crisis and gave the money out to institutions all over the world. And no, they're not loans. Stop it. Stop saying that. The accounting has never been disclosed. They do not have it anywhere publicly available, and it is now buried and gone. So much for the Fed having your back. You came here for the truth, so let me unveil that for you. Today we are going to talk about the Federal Reserve. We're going to talk about the ECB and the other central banks and the activities that they've been up to. I've got some other information as well, but the Federal Reserve is sending out a warning right now. I want to try to make this video as quick as possible, but you know how I like to rant on. One of the things I wanted to talk about very briefly before we move into this is the fact that we keep hearing about the Federal Reserve's balance sheet. The balance sheet is currently at around $7 trillion. But before the 2020 problems and everything that was happening, we saw the balance sheet peak out at 4.5 trillion. But when we look into it a lot deeper, it was actually much higher. There is information that never ended up on the balance sheet, such as the 16 trillion that was found out with the limited audit of the Federal Reserve. Imagine that $16 trillion, they printed it out in secret. There's no accounting for that. If you look on the federalreserve.gov website, if you look on the St. Louis Fed website or any other website, you will not be able to find it. But they actually did get a limited audit and they found, wow, they were printing a whole bunch of money and they were giving it to everybody. What happened with it? Well, we don't know. We do not know what happened after. We do not know all the accounting because you're not allowed to know. But they have your best interests at heart? No, they absolutely do not. If you do something just, if it's all good, they would be able to put that out into the public. They would have the transparency there. But bad deeds are always done in the darkness, and they never want to be put in the spotlight. Things are different today, but what's going on behind the scenes? We will never know. And this is something that people who apologize for the Federal Reserve and the other central banks refuse to admit, or they're in a state of denial. I wanted to get into this article out of Bloomberg. First, let's jump in. The bills are so big that only money printing can pay them. Barriers between monetary and fiscal policies are disappearing. Federal Reserve is set to buy $3.5 trillion of bonds this year. Imagine the balance sheet had gone down to about $3.5 trillion. That was the entire balance sheet, and now they're expanding at that rate in a single year. And nobody is saying anything. Nobody's saying anything at all. They in fact love it. They're cheering the Federal Reserve on. Forced into record spending by the threat of another Great Depression, policymakers are blurring the lines between borrowing the money they need and simply creating it. Most modern economies have tried to keep the two activities as separate as possible. The typical setup has been for elected politicians to take charge of the budgets and meet any shortfalls by borrowing on bond markets, while the money printing machinery was walled off in another branch of government, the central bank. But those barriers began to look porous after the financial crisis of 2008, and now they've all but disappeared. Congratulations, the Federal Reserve has taken over. There's more in here if you want to read it, but I just thought it was interesting to start this video off to see what they have done, to really rant on about the Fed and see their activities and how horrible they actually are. The Federal Reserve releases their financial stability report, and I wanted to bring just this one little part to you. If you want to check it out, of course, the link is in the description directly at the Federal Reserve's website, federalreserve.gov. If you're new to the channel, understand that I always give you information directly from the source. If there is a BLS document that you need to see, it's going to come from the BLS website. If you need to see it from the Federal Reserve, I give you the Federal Reserve website. The Money GPS is all about the factual information that can be sourced and traced back. So let's look at this. Our view on the current level of vulnerabilities is as follows. Asset valuations. Asset prices have been volatile across many markets. Since their lows in late March and early April, risky asset prices have risen and spreads have narrowed in key markets. Asset prices remain vulnerable to significant price declines. Check this out, okay? We're talking about assets like stocks. They can can significantly decline should the situation we're encountering today take an unexpected course. And of course, that means on the way down. The economic fallout prove more adverse or financial system strains emerge. This right here is the big news. They're saying that this could really be taken down significantly if things get worse, and we know that. Just because the Federal Reserve has pumped in a historic amount, of course, and you also have the deficit spending by the government, it doesn't necessarily mean that everything's going to be okay, and the Federal Reserve themselves are actually admitting that. Borrowing by businesses and households, debt owed by businesses had been historically high relative to the GDP through the beginning of 2020, with the most rapid increases concentrated among the riskiest firms amid weak credit standards. That's huge. That's so important. That should be on the cover of every newspaper, but nobody gives a damn. The general decline in revenues associated with the severe reduction in economic activity has weakened the ability of businesses to repay these and other obligations. Big time. We know this. I've been covering it here on the channel. I've shown you so many things, particularly with the corporate debt, that should be a very worrying sign. But what do? They just pile on more debt. They just make things worse. All of these different stats that are actually really important have been getting worse over the past few years. 2018 was a big year, 93% of assets down, and for some reason, it seems to be ignored. Lenders of last resort, the central bank balance sheets as a share of the GDP. It's unbelievable. What we're looking at here is the Federal Reserve, the ECB, the BOJ, and the BOE. All of them have expanded their balance sheets when you look at it in nominal terms, so basically how much they're printing the dollars or the euro or so on, but even as a percentage of the GDP, it has really increased as well. When you look at it in this percentage terms, of course, the BOJ has gone into new territory. It is actually over 110%, which is unbelievable. But don't worry, all the other central banks are trying to catch up right behind it. You got to think about this. When you have $20 trillion worth of fiat currency that was being pumped into the system over, let's say, a 10-year period, and that was way far beyond anything that we had ever seen before. And now we go into a level that is making that look like nothing. That should be a real big warning sign to anybody who's willing to listen. Spenders of last resort. Government budget balance as a share of the GDP. You can see what the US has done, minus 15%. Looking at the Euro area, of course, Japan, the UK, all of them looking terrible. We've seen the stats pile up and it is not looking good. Normally what they would say is, well, if you got a debt problem, if you got deficits, if you got a situation, you just grow your way out of it. If we can get that GDP to go a little higher, if we can just get the inflation to climb a little higher, we're going to be able to solve our problems. And now we can see clearly they are unable to do that. So how do you get this to be fixed? If you're in a deficit, if you've got a problem with your government, what can you do? Well, I've got an idea. You use your central bank and their magic wand to print money out of thin air and make it happen. Does anybody see a problem with that? Then we've got this zero bound yield on a 10-year government bond. The US is basically around zero, Germany into the negative, Japan into the negative, and the UK, hard to tell on here, I think it's still in the positive, but basically at zero. Everybody's going down, down, down. This has been fluctuating, of course, depending on when you're watching this video, but it looks like the trend is going into the negative. And what does this mean for the value of your currency? What does this mean for your investments? I'm telling you right now, it's not good because they're basically pushing people into riskier and riskier so-called assets. I don't want to, I hesitate to say assets, but anyway, this is what they're doing. And they're creating this shift into equities. And of course, that distorts everything. Not because a bond is good or a bond is bad. It doesn't really matter, but you're distorting it. And that's the problem. These distortions cannot be resolved by printing more money. The reason we're in this problem in the first place is because of the money printing. And the more people that realize that, I think a lot of them will be rescued by the knowledge that they gain along the way. This isn't a good thing. When you see this, even if you're not invested in bonds, even if you don't have any ties to them, you need to know how the financial system works at the most basic level. And this is worrisome. And to finish off the video, just wanted to talk quickly about Mr. Warren Buffett. They sold off most of its Goldman Sachs stake, a long-time holding that slumped nearly 33% during the first quarter. They also cut their investment in JP Morgan by 3%. So it looks like they shed some of their bank stocks here. I don't know when exactly they did it. I'm sure they mentioned it, but you can look at the 13F to get more details on that. I just think it's interesting to look at what the big investors, the mentality of what they've been doing as this crisis has been hit. And we're definitely seeing a divergence. A lot of them are waiting and seeing. They're not investing right now. They're standing back and they're saying this could get really messy. I would rather be out than in. I'm not necessarily going to short. I'm not necessarily going to pull all my money out, but they're kind of just waiting. There have been some others that have said, no, we've hit the bottom, we've hit the floor, and now we've started to grow again. The economy, of course, plays a big role. It's not all about the Federal Reserve, because if it was, why not print an infinite amount of money? Because if you see the correlation between printing money and stock prices, asset prices, while being able to maintain a very low rate of inflation, then you would have to think to yourself in your head, well, why not just print more money? If more money equals higher asset prices while being able to keep inflation low, then it doesn't make any sense why you wouldn't print 10 times as much, 100 times as much, 1,000 times as much. Why not? There are no problems with this. That's what the mainstream wants you to believe. That's what some people out there will love to stuff down your throats, but I'm not going to feed you any of the lies. You're not going to get that here on this channel. I want to thank you for listening to the mad mind of the Money GPS. If you appreciated the information, please hit that thumbs up button on the way out. If you want to see content on Instagram and on Twitter, I'm doing stuff on there every single day. Check me out at the Money GPS. Online sales have really climbed much higher right now, and I created this free e-course several months ago to teach my subscribers, if they're interested, on how to do the whole thing top to bottom. It's free. Check it out, theamazongps.com. The financial system is confusing, it's convoluted, and unfortunately many people don't understand what it's all about, but I made it so simple. Check it out, link in description if you want the audiobook, themoneygps.com. Have you seen this video yet? If not, I would highly recommend it. Click on it. I'll see you there.